think beyond traditional business banking. Think a partner that gives you in-depth financial insights.
Well, hi there. If you have just tuned in, it is time for the Power Table with myself, Fifi Peters. Now, in less than a week, South Africa's Finance Minister Enoch Godongwana will have to present a balanced ledger, as it were, when he tables the national medium-term budget. You will remember that back in February, the minister estimated that the tax revenue collection for the 2023 financial year would total around 1.69 trillion rand, which was actually higher than 2022 forecasts. But of course, a lot has happened since then. For instance, China's economy has underwhelmed, weighing on global growth prospects. We've seen commodity prices retreating that have taken the shine off mining sector profits also. And Transnet, while its network has been further derailed by inefficiencies, essentially that have cost the country billions in lost export opportunities. Furthermore, while the power cuts, or load shedding as we call it here in South Africa, have eased since February, many companies have been left with a higher energy bill that's expected to eat away at their bottom line. Did I miss anything? Yes, I did. Israel right now at war with Hamas, and the risks of that war becoming a lot more protracted are not off the table, which could be inflationary, meaning higher for longer interest rates that could further squeeze the household purse. What then does that mean for the type of budget that Minister Godongwana will present to us in just a week's time? Well, we are asking the panelists at the Power Table, Zinhle, Tyikwe, the CEO at the Consumer Goods Council of South Africa, joining us, as well as Maarten, Ackermans, Chief Economist at Citadel. Maarten, I want to start off with you, sir, if you will. Good afternoon to the both of you, by the way. But 1.69 trillion, the estimate back in February in terms of what total tax collections, revenue collections would be. The general agreement amongst economists right now is that the Treasury is unlikely to get that particular forecast. Is that your view? And if it is, by how much do you reckon that the government will undershoot its initial forecasts, and why?
Yes, good afternoon. I think that if we just go back to February quickly, the numbers that's being presented at the time, we felt was actually quite optimistic given where we were in the global economy and the outlook not only for the local economy, but also for the global economy. Now, a couple of months down the line, as you said, the world is in turmoil. We haven't seen the economic growth that we expected. We had a lot of load shedding. And on that basis, obviously, everything is under pressure. So if you think about the budget, we normally talk about ratios as a percentage to GDP. So when the GDP is not delivering as expected, then all those ratios are under pressure. So on the revenue side, you're 100% correct. We're probably going to miss the revenue target by, call it around about 25 billion short, which is putting a lot of strain on government, or on the budget rather, in terms of where do we find that shortfall, and we can unpack it a little bit later. But it's not just the revenue, it's also on the expense side, where we actually had some expenses that been baked into the cake, so to speak, during the course of this year, which we actually haven't had on the table back in February. So the two sides of balancing the budget, both actually under pressure. The expenses going up quite significantly, more than expected, and then the revenue being under pressure also more than expected. And that's now where the balancing act is coming into play.
And so by expenses, just for clarity, are you talking about the fact that the settled wage bill of the public sector a lot higher than what Minister Godongwana had baked in his initial estimates?
Yeah, that is probably the biggest unexpected expense that also came into the mix, the 7.5% wage increase. So if you think about that, we've got the wage increase, which I've said is now baked into the cake. That's not a once-off. That is something that's going to be with us in the budget until we start to reduce headcount, if at all. On top of that is the social grants that we committed to pay, which is very important, but that's also baked into the cake. That's not an expense that one can get away from. And then the cost of servicing the debt, because right now we are balancing the budget by borrowing more, but that is costing government quite a lot, and we can unpack that a little bit later. So those three expenses, and if we think about the debt servicing cost, that's now the third largest expense in the budget. That is something that you can't just get rid of in a budget speech that is now part of the budget going forward for the next couple of years. So that's the one challenge. And then, like we already said, the revenue that's not coming in at the moment.
Okay, so the book's very much unlikely to balance, and as you said, that the minister will have to plug the hole, find the missing money from somewhere, which we'll unpack in just a short while. Zinhle, as the Consumer Goods Council, what would you guys, what's your organization looking out for in terms of what the finance minister may or may not say next week?
Thank you, Fifi, and good afternoon to you, Maarten, and the listeners. For us, we are seeing a really difficult trading environment for our members, as well as any business in South Africa. As Maarten has already alluded to, there's a huge deficit on the budget speed that South Africa has to deal with. We are seeing a shrinking talent, and we are seeing a lot of service delivery issues that we are seeing. And load shedding obviously is impacting our members at a very high pace. So what we want is an environment where business is able to trade and is able to invest back to its and on their return on investment, so that we can create employment and eliminate inequality in this country, because we have really, really big challenges. Load shedding, I mean, is our members, at least we've seen a number of them have been reporting, and since last year, we've seen our members spending nearly 2 billion rand on load shedding and generators and diesel. So we are really looking forward to the minister letting us know what relief is he going to be providing to businesses, so that we know that business can then reinvest and create employment and assist in the economic growth, because consumers as well as businesses are really struggling at this point.
All right. Zinhle, I mean, if we talk about load shedding, the picture in February, very different to what we're experiencing right now. February, it was hours and hours on end without power for most of the month, up until March. And since then, what we have seen is a relief, an easing of the power cuts that we've experienced. But also, Zinhle, in February, what the minister did announce was the rejigging or repurposing of the COVID bounce back scheme. He announced it to be a scheme that would now allow small businesses, some perhaps that you're making reference to, and even households to be able to tap into that scheme to make their households and their businesses load shedding resilient by being able to go to the bank, get the monies to invest in the generators and the alternative power solutions, as it were, at more favorable rates. Can you comment on that, and whether any of your members have been able to use that facility, and whether it has been helpful at all, or do you need more?
At this point, it has not come into effect, because, as you know, it was announced in February this year. So it means there's lots of processes that SARS and our members have to go through to make sure that we streamline the process. So it is becoming such a cumbersome process. I don't even want to just mention what our members are currently going through to try and get that diesel relief or rebate for the manufacturers. And ideally, we want it for our retail members, because the whole food cold chain and value chain is important from the sustainability perspective. So the streamlining of processes and making sure that our members are able to claim, and the regulation in terms of how that needs to be managed, is something that we are still working through with our members and SARS, but it is such a cumbersome process. So we haven't received that benefit.
Okay, no, that's good to know, and certainly good to keep in mind should we get the opportunity to talk to the minister. Hopefully we will when after he tables his budget. Maarten, where's the money going to come from? I feel like it's that Where's Wally game, where you're looking at this board and you're trying to see where Wally is, because essentially that's what the position that we're in right now. There is a constraint of cash. If we look at everything that is going on, and to the point that you made around the cost of servicing that cash in this environment, and we know that the reception that government has received from trying to find that money from the bond market hasn't been as favorable and as desirable as it would have otherwise wanted. So where does Minister Godongwana get the money?
Yeah, I think so he did request that, a lot of the departments and a lot of the municipalities come forward with ways to cut expenses. That will certainly help if we can do that. But being in an election year, it is not so easy to actually have significant cuts to actually fix the problem from the expense point of view. So where do you get the money from? Well, basically two sources. We can either keep on borrowing the money, and we'll unpack that now, or hopefully get the economy going so that we can get the tax revenue without increasing any tax rates. That's probably the easiest way of doing it. But unfortunately, I don't think we'll get that right in the next couple of months. To really get the economy going, there's a lot of structural issues that need to still take place before we'll actually have an uplift in the revenue. So on the debt side, I think government bonds, the foreigners are not, massive supporters anymore. They used to be. They are concerned about not only the SA risk, but what's going on in the world with emerging markets. Having said that, there's still a reasonable demand for our bonds. But if you look at the increase in yield over the last year, that is a reflection of investors asking to be compensated for the additional risk given the fiscal situation. The reality is that, even if we can keep on borrowing the money to actually balance the budget, it is unsustainable. At the moment, the government is borrowing close to 2 billion rand a day to keep the lights on, so to speak. That results in a 22% of the budget going to interest payments. So think about it this way: if we collect 1 rand of tax, the first 20 cents goes paying back interest or servicing the interest, which basically leave us with 80 cents to do the rest, of which a big chunk is used for the salary bill, the wage bill, so to speak. And then we've got a couple of cents left for the important stuff like healthcare, education, and the likes. So the concern is that, yes, you can keep on borrowing money, but when that 20 cent in the rand becomes 25 or 30 or 35, then you run into that fiscal cliff where you need to actually borrow money to actually just service your debt. And that is something that we definitely want to avoid. So the way that the minister is going to present the budget needs to speak to fiscal discipline in terms of pulling in expenses over our fiscal framework, and then ideas in terms of uplifting the revenue. The other alternative, like I've said, is tax. I personally think in an election year, again, it's quite difficult to be aggressive on increasing tax rates. The easiest or one of the best options would be to actually increase VAT. It's probably not very popular, but the South African VAT rate is still way below the VAT rate in Africa. So there is a case to be made that, we can actually uplift our VAT rate and still be below our peer group in Africa. But again, to do that right now is probably going to be quite a bit of a challenge. But if we can't fix the economy to actually start delivering higher growth and on the back of that better tax revenue, then probably, going into the next couple of years, government or the Treasury will need to look at increasing something like that again, to actually assist in not just relying on borrowing to plug that deficit.
Zinhle, what do you think about that? An increase in value-added tax. How do you reckon that may likely land on your members and the impact that may likely have?
Definitely something that we're seeing that as a possibility. But what we want government to really consider in terms of increasing that is to zero rate a number of products or produce that our members are selling, because we need to make sure that the consumer gets some relief, so that the consumer can have excess money that can then start circulating in the economy to boost themselves, because our consumers are really struggling with the interest rate that has been going up since November 2021. And there has been a big challenge for members as well to make sure that with the inflation rate and all the other expenses that I have mentioned before, that are just making it difficult to trade and do business in South Africa. So for us is to see zero rating of products, a number of products that we have identified and have been working with government from a Netl perspective to say these are products that we have identified that can be zero rated, which are nutritious, so the poor and the less fortunate in South Africa can have a benefit of those products and find them cheaper. Yes, it will be a less amount into the fiscus, but it's important that we are able to assist consumers that are really cash strapped.
Okay, Zinhle, like what? Just out of curiosity, what are some of the items on the list that you reckon could be a zero rated for the betterment of all right now?
Like eggs are currently not zero rated. We are experiencing challenges with the avian flu that we are having in South Africa. Eggs is one of those. So there's about 10 products that have been identified that we want zero rated, and we want to work with government to get those products zero rated.
Okay, no, interesting. We'll be on the lookout for that entire list as well. Maarten, just circling back to the comments that you did make about growth, I think what the growth numbers have shown so far is a certain level of resiliency that South Africa's economy continues to have, notwithstanding the fact that it's growing well below the levels that are required to meet any of our targets by 2030. But it has shown resiliency, particularly if we look at what manufacturing has done and some of the investments that players over in that space have done to shield themselves from the power cuts and to ensure that business continues as normal as is possible. Do you reckon that the minister will make any revisions to growth forecasts in terms of what National Treasury is expecting, similar to what we've seen from the Reserve Bank?
Yeah, I think you're 100% right that, we were fortunate that technically we're avoiding a recession at the moment. So we haven't seen 2 negative quarters of economic growth. So there is definitely some resilience. Having said that, I always say, well, any growth below 1.5% for me is recession, because that's the running rate in the growth in our population. So if we can't grow faster than that, then we're not growing the cake for each and everyone in this country. So that's a minimum growth that we should actually get. We're not there yet. And we actually need to grow multiples of that to really start addressing social issues, unemployment and the likes. But where we are right now, I think the next 12 months globally is going to be tough. There's no way that we're going to escape from that. But if you look at the fiscal framework, which is a 3-year framework, then we do think that, a lot of the investments that's coming into the pipeline right now, on the back of also some of the tax relief given in the February budget on solar, should start to deliver results, year 2 and 3. So again, maybe not the next year, but thereafter. And on that basis, they could probably start lifting the growth outlook in the later years. You're 100% right. If you look at the manufacturing this year, it's doing better than expected. It's one of the best performing sectors. But if you delve into manufacturing, it's not all sectors in that space. Food and beverage doing fairly well, but heavy mining, as an example, is still struggling. And that is a function of whether you can switch to alternative energy. It's not that easy for a high consuming energy consumption mine to do that, but for a food processing plant to go solar is easier. So we are starting slowly to see some benefit in terms of the energy mix. And again, I think in year 2 and 3 in the framework, they could probably work in that will benefit economic growth.
Just a quick one, Maarten. Eskom obviously was the headline act in the February budget. It seems to be overtaken by some, in some's view, by Transnet, essentially. What do you reckon the minister will say about Transnet this time around?
Yeah, well, all SOEs are, as we know, under pressure. I think he had quite a hard line in all the budgets so far in terms of saying, well, there's no free money. You need to be able to show that you can operate as a proper business. The reality is that this is just, if you think about Transnet at the moment, another structural issue that's keeping us back as a country performing at full capacity, because we are battling to get the commodities to the harbour. That's the first one, and then to actually get them shipped out of the harbour. There is also talks about private participation. So maybe they can, mention some of that. I think what we can also get from this budget is just more indications and ideas in terms of how they're going to stimulate the economy. To go back to February, the announcement in terms of the tax relief for especially business going solar. Those are the kind of things that will also help the budget to get back to balance. Because the private sector will take those initiatives, run hard with it, as we are doing currently with the solar or alternative energy, which will then result in better economic growth later on, that will again lift the revenue side of the budget.
All right. Well, the countdown then continues. But thanks so much for your time, to the both of you, in fact, for just giving us some information to start digesting and chewing on up until the Minister, of course, does take to the podium. Zinhle, we'll leave it there, ma'am. Zinhle Tyikwe, the CEO of the Consumer Goods Council of South Africa, as well as Maarten, the Chief Economist at Citadel, helping us wrap up this week's Power Table.
Think beyond traditional business banking. Think a partner that gives you in-depth financial insights.